What's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, I want to go over some of the key things that I learned from passing a top step $50,000 combine in just 7 days. Now, do you have to rush to pass these things? Do you have to take, 5 months, 6 months to pass? There's no real right or wrong answer. It all really comes down to and kind of depends on your level of comfort, your level of experience, and what the market is actually providing you. So one of the first things, and probably the most important thing that I learned in this past 7 days by taking this new fresh combine, is that risk management is going to beat strategy every single time. Now, what that means is that if you do not understand how to manage your risk and you're playing, too many contracts for your level of experience or your level of comfort, doesn't matter what strategy you're using, the moment you take 1, 2, 3 losses, you're not going to know how to handle it. It's going to cause you to go on tilt. It's going to cause you to overtrade. It's going to cause you to start taking trades outside of your trading process. So the more you can manage risk and the more that you can be comfortable losing and winning and okay with those dollar amounts, the better off you're going to be. So remember, it's not the strategy, it's the risk management behind the strategy that actually gains you more confidence. And with more confidence leads to more setups, and with more setups leads to better probabilities in wins and losses. Now, the second thing is patience is going to pay. Whether it takes you 7 days to pass a new evaluation challenge, or whether it takes you 2 days, or whether it takes you 2 months, patience is going to pay, my friends, because not every single trading day is going to provide those killer opportunities to get into a trade off the open and just come back at the market close and see your P&L be through the roof. Some days the ranges are a lot smaller, causing you to go a little bit away from your normal process or your normal profit taking zone. Maybe it's a little bit more of a scalp day. Maybe it's a trending day. Maybe there's only 1 setup in the day, 2 setups that you can really make money on. Maybe there's 10 setups that you can make money on. All in all, come into each and every single day understanding that just because we're on a new trading day doesn't necessarily mean it's going to be like yesterday. So a lot of times I see traders, coming off of a bad trading day or where the price action was very choppy, and they bring that attitude into the following day and they miss trades because they don't want to get involved in the chop, and it tends to be a fantastic day. Just like I've seen traders have a fantastic trading day where maybe the trend was trending all day and they think it's going to repeat the process again tomorrow, and it turns out to be a little bit of a chop fest and a snoozer, and they tend to overtrade because they're forcing moves that they want and they had from yesterday, if that makes sense. Which leads me into kind of the third thing that I was really thinking about during this evaluation challenge, is that rushing is going to kill confidence. And what that means, and what I mean by that, is that when you feel the need to make X amount of dollars in a day, when you feel the need to keep up with someone else who had some, outcome that you are trying to work towards, when you're rushing to make, the specific dollar amount, the profit target just to pass, that's when I see a lot of traders put themselves in a lot of trouble. Sometimes, you might be on a new evaluation challenge and it's 2-3 weeks and you're feeling that pain where you don't want to pay the monthly renewal fee. So then you put on too much size and, hoping to just pass it right away. And then you give away everything that you've done in the past 2 to 3 weeks. So rushing kills confidence. And in this business, we need confidence not only in ourselves, but in our strategies. And if you don't have confidence, you're not going to take those trades, which is going to cause you to miss trades. It's going to cause you to not take trades, and it's going to cause you to take trades that are outside of your process. The next thing is, a little bit more of just like a message, like a memo to you, is anyone can do this, whether you're just starting out and you're barely learning how to trade, or whether you've been trading for 10 plus years. I'm no different than you. You're no different than me. We're all human beings. We can all do this. I don't have any crazy college background. I didn't study economics. I didn't study market cycles. I didn't study nothing, right? I studied the market through being a student of the game, not by, doing anything extraordinary, right? So what I'm saying is anyone can do this. depending on your level of experience, it might take some people a little bit longer to pass, and it might take people a little bit, might pass a little bit sooner. But again, anyone can do this. And if you feel like you're in a particular spot where you can't do this, you really have to take a step back and analyze from the outside in and see what exactly is causing me the most problems. Is it, position size? Is it, market structure? Is it, the market environment? What is it? Is it the instrument? Maybe the NASDAQ 100 is too fast for you. Maybe you need to go trade US 30 or trade, the ES, or maybe, you have a little bit better success trading gold or oil. Find that instrument that resonates with you, because as long as there's a chart, as long as there's candlesticks, and as long as there's price action, we can trade anything, whether it's bull market, bear market, even range market. There's areas of opportunity to make money. So again, remember, anyone can do this. Take your time. There's no rush. Kind of go through the beginning of the points in this video and kind of just let the things sink in. Let them resonate. Again, time is your friend. This is kind of going back to a point I made just a little bit ago. Time is going to be your friend. So there is no rush. A lot of these trading combines with a lot of these futures prop firms is unlimited time to pass. So whether you are rushing to pass in a week, or you're still taking an evaluation challenge 60 days later, there is no rush. There is no time limit. Time is going to be your friend because of this point right here. Sometimes, and I'll use this last 7 days as an example, volume is extremely low. We are coming out of one holiday weekend, which is being the Christmas holiday weekend. We're rolling into the next holiday weekend, which is New Year's. Price action hasn't had a lot of follow through. Price action and volume is dried up. There's not a lot of market participants in the market. Sometimes you're seeing moves, expand on thin air, and other times you're seeing hours of just pure range where, it's barcoding back and forth and back and forth. So time is your friend. Go through your strategy, go through your process, and actually take the time that is needed to pass these challenges, to pass these combines or evaluations or whatever they're called, depending on the prop firm that you're playing. Time is going to be your friend, because what could be horrible price action this week could be amazing price action next week. And if you rush the process and you try to get to that imaginary finish line, and let's say you blow your account up and you have no more money to buy another challenge or to stay in the game and continue to trade, and next week can be the most bullish or bearish week that we've seen in the past 6 months, where you could have made so much money based on your process. So make sure that you're taking all the time in the world to pass, because again, there is no rush. There is no gun to the back of your head telling you you must trade today and you must pass today. As soon as you start to cope with that and deal with that and understand that, you're going to be a lot more relaxed when it comes to trading. And the last thing that I kind of was really thinking about during this past 7 days is that hoping kills. Hopium. Anytime you want the market to do something, you hope the market's going to do something, you hope that your trade's going to come back in your favor, you hope that it hits your one-to-one price target. Hoping kills. We have to be adaptable in this market. Sometimes that means we need to cut a trade early before it hits our stop loss, because we can see that the price action is not going to do what we wanted to do. Sometimes we have to take profits early. Sometimes we have to change from being a day trader to a scalper, from a scalper to a day trader. Sometimes we need to adjust what we're doing on a day in and day out basis, depending on what the market's doing. A lot of times I see traders take trades and they say, well, I was up a little bit of money, but I was hoping that it hit my one-to-one price target, and then it came back down and stopped me out. Well, I got into this trade and I took the previous trade and it ended up working, but this trade went down and started to put me in drawdown, but I was hoping that it was going to come back or bounce off this previous demand zone or previous structure. Hoping kills. Don't hope, guys. The moment you guys start hoping and you guys start wishing is the moment your trading is going to get all out of whack. I hope these tips helped you guys. I hope something in here resonated with you. If it did, give me a like, comment, a follow, a subscribe, turn the notifications on. If you guys would like to trade with me, that link is down in the description box below, and I'll see all of you guys on the next video.